Hey guys, welcome back to the channel. If you're new here, welcome to the channel. In this video, I'm going to be sharing with you guys the exact steps you have to take from the first step to the last step when you're looking for a multifamily 2 to 4 units property. I'm going to share with you guys the search and then doing the analysis on the property, looking at the rental income, looking at all the expenses, calculating mortgage payments, seeing if the numbers make sense. And in some situations, you could get away with having to live in one of the units, rent out all the other units, and actually live for free. Anyways, I'm going to be covering that in this video. But before I do that, make sure you smash the like button, hit the notification bell, and subscribe button. It helps my channel out, and I can continue posting free content for you guys, creating these 15-minute videos, giving you guys advice every single week. And if you are just watching this for the first time, I recommend you check out the video I made here a couple weeks ago about the FHA loan and how you could use that to finance the property. So let's get into it. So guys, the first step of looking for the rental property is going to be going on a MLS, multiple listing service, to find the property. And there's a lot of them out there. You can look at LoopNet to find them, or you can look on your state's MLS. NJMLS is pretty big, and I think it has more properties than LoopNet, so I'm going to be using this one. You could look at the ones in your state, or just look at LoopNet if you want. But here we go. We're going to look at properties which are within this criteria of 2 to 4 family. And FHA, we're going to be looking more so at 3 to 4 units. So FHA loan limits, the triplex has to be at least worth $500,000, and the loan amount has to be $487,000, and for a fourplex it has to be $605,000 at minimum, and at maximum $1.1 million to $1.4 million. So let's fit those criteria in there and search on this. So I'm looking at this by the most recent. I want to see what the deals are there that have been mostly recently posted. Here's one, a 4 family, but it's $550,000. So it would not qualify for that mortgage, FHA mortgage, which has to be at least $605,000. However, if you did want to do repairs on the property, add in another $50,000 for repairs, maybe that would qualify for that. And let's just exclude this one out for now, and let's look for another one. Here is one in North Bergen. It's a really good area in New Jersey. It's expensive, gets really quickly rented out. So we're gonna do analysis on this building right here. It's $1 million. Normally you would not qualify for something like this on your own unless you're making a lot of money, but I'm going to show you guys how you can afford this, and not only afford it, make a lot of money from something like this. So here we go. We're gonna use this calculation worksheet I prepared to do analysis on this property. $1 million on this property would mean a $35,000 down payment, and your mortgage amount is going to be $965,000, which then carries forward to this Excel worksheet that calculates the mortgage payment and gives you a schedule of your payments. Now I'm going to leave a link to this down below, but I use this from mortgagecalculator.org, and I will leave a link, like I said, down in the description. So here is the mortgage payment plus PMI. I included a higher interest rate. I put 4.1% because my interest rate based on my credit score would be 3%, and then I added another 1.1% for mortgage insurance premiums. That's how I get the calculation. Now the property taxes come from the website, $12,683. I put that in here. Vacancy is 5% calculated, and homeowners insurance is calculated based on the purchase price. And then utilities and repairs, all that is a estimate, and I'm estimating about $5,250 a year. Professional fees is like legal
and accounting fees. I am not going to be using any lawyers for this. I don't think it should be really included in the cost unless you are using a CPA. I'm a CPA, so I don't really need to use another CPA. I'm going to be filing my own taxes. So property expenses for the year are $25,000. The mortgage payment for the year is $55,000, $56,000. Total cash paid for this property in your first year of owning it is going to be $81,000. Now, normally, if you're making $80,000 a year, they're going to be looking at your debt to income ratio. Your wages less all your loan payments is what you're going to have remaining to use in this ratio. But 43% of your wages less your loan payments is allowed for a mortgage payment. So normally I would only qualify, let's say if I'm making $80,000, I would qualify for a mortgage payment of $2,866, and that's saying that I would not have any loan payments. Let's say all my loan payments are paid off. Obviously, the loan payment is much higher, and I would be short another $1,800. But because this is a rental property and it has 4 units, the other units are going to be rented out, and that is going to be included in the rental income and also included in the debt to income ratio. So what you want to do next is look up on Zillow what the properties units would rent out for. So I already went ahead and did this, and one of the units, 2 of the units is 3-bed 1-bath, and 2 of the units are 2-bed 1-bath. So 2-bed 1-bath in North Bergen rents out typically for about $1,700 on a very conservative side, and I want to make these numbers conservative because I want to leave myself room for any unexpected expenses that might come up. So the first 2, $1,700, and then let's look at 3-bed 1-bath. 3-bed 1-bath in this area, typically on average, I would say rents out for about $2,200 conservatively on average based on Zillow search. $2,200. So the income produced from this property, $7,800 a month. Your mortgage payment is $4,662, and your property expenses are $2,176. So your net cash outflow is $6,838. Your cash inflow is $7,800. That means you're positive $961 a month. On top of that, your mortgage is getting paid down every single year, and in the first year you're gonna get your principal paid down by $16,700, which is coming from this other tab right here. So in your first year, your gain would be $28,000. You put down $35,000 down. Your first year, you're making $28,000 back in cash and equity, which gives you a return on your investment of 80%. That's pretty insane. So the rental income is included in debt to income ratio. So now you can pay a mortgage payment of $6,200, and this is your safety of $1,557. So let's say you even make like $60,000 a year. You're still going to qualify for this kind of loan because the property is producing income. So the other thing I forgot to mention is you have to live in one of these units for the first 6 months. So let's just say I live in one of the 2-bed 1-baths units, and that would mean that the monthly income produced from this property would be $6,100, but I would be paying $6,750 for all the expenses. Now, if I decided to rent to a roommate and have them cover maybe half of the cost, which would be $850, that would mean that I would be cash flow positive $196 every single month. and with the equity, your first year you make a 53% return on your investment. I think this is a really good property. The numbers make sense. It fits the criteria of the FHA loan. Your income, debt to income ratio fits the criteria. The next thing you would do is, based on these numbers, show this to a loan officer and try to get a pre-approval. That way when you go request a showing with the agent, you automatically will be pre-qualified for this, and this will help you save time in the process, because a lot of these loans, a lot of these buildings, they're going to want a fast closing on them, and that's why you need to be ready for placing an offer on a property like this. Now, I'm just going to show one property as an example, but you can clearly see that there's hundreds of listings, and you could go through these and see these results, and you should be looking at minimum like 15 to 20 properties before you're selecting which one is the best one for you. There's many of them. I'm telling you guys, you could find, here's another one, Union City, 4 bed, 4 bath. This is 4 units, 1 bed, 1 bath. You do the same process on these units, see if it's worth it. For this $1 million property, the numbers make sense. This is something that I would definitely considering putting an offer in and see if I would pre-qualify for. Alright, if you guys made it this far, appreciate you guys watching. I hope you guys have a great weekend. Stay tuned for next week, and I'm going to be sharing with you guys a checklist of what you have to do before you make an offer on a real estate property and the exact due diligence you need to do. So make sure you stay tuned for next week. I'll see you guys later.